I'm Dan Fitzpatrick at StockMarketMentor.com, and today I want to look at Amazon, though we're looking at it from a while ago. Okay, this was on the 27th of March. So we've seen that this stock was squeezing. I was talking about it a lot in the forum. I'm pretty sure I've even done a few free chart videos on this, showing this, I guess you could call it a coiled spring. I would just call it like future money, where the stock had been, these were the lows, just kind of, that's the high, and then a tight little squeeze here. And so this is not some random stock. You know, it's a very, very high profile stock. And so you know a lot of traders are looking at this and it's in demand, but there's a lot of supply, right around 850. So the idea for trading this stock was that you wait for the stock to pop, because several times here in the past the stock has pushed up above 860-ish, something like that, and then pulled back. So if you're trading options, you know, you trade, which I recommend for a lot of people who know options, because stock's $860. You can control a lot of shares and a lot of money's worth of shares for with 10 or 20 options. So on that type of thing, if you're buying here, then you're taking a loss, and you're buying here, then you're taking a loss, etc., etc. So you wait for the right move, and then you know that once the stock breaks out, it's likely to go for several days. So here, there's no breakout here. You know, sure, it would have been nice to have bought here at 840. Now you're up almost 20 bucks. Yippee. Okay, well, this has happened before. We're sacrificing some profit in order to maximize our certainty. In other words, we wait for the move. And so like even intraday, boom, you know, you're in. You don't have to wait till the close here. When you see the stock start trading above this level, you go ahead and buy it. And by the way, you don't have to be sitting at your computer all day waiting for this. You can set price alerts. There's any number of, just about any software for trading will give you a price alert right to your phone. So you set a price alert, 160, 161, something like that, and then when the stock breaks out above there, you're in. Now, on a volatility squeeze like this, this is not a one-day wonder. It keeps going. Now, watch these Bollinger Bands. This is 2 standard deviations above and below the 20-period moving average. Most of the time, the stock's supposed to stay within these Bollinger Bands. If it doesn't, then the bands are going to start expanding, as they're doing here, essentially trying to catch up with the stock. Well, so 1-2 days in a row, the stock trades above the upper Bollinger Band. 3 days in a row, it keeps going. This is a strong stock. 4 days in a row, it continues to move. Okay, this was Monday. Okay, now the stock's definitely got a reverse, right? Okay, well, not so fast. We get another few percent here. So for how many days in a row? 1, 2, 3, 4, 5 days in a row, the stock has closed above the upper Bollinger Band. Not supposed to do that. It's breaking the law. Now, if we go back and add these other 2 days where the stock, you know, started trading after it rebounded off the 50-day moving average, then we have 1, 2, 3, 4, we know what they are, 7 days where the close is noticeably higher than the open. In other words, there's buying all the way into the close here. You can see it 1, 2, 3, 4, 5, 6, 7 days, just like that, closing near the top of the range. Now we get to Wednesday, the 5th. We got a really nice move during the day, and then the stock came up almost to 925 and then reversed. Frankly, the reasons aren't particularly important. Let's get to present day here. The reasons why it reversed aren't particularly important. You know, it was a Fed minutes thing, et cetera, the whole market reversed. But what is important is this. It's important that you understand there's a phase 1, 2, 3 sequence in these volatility squeezes, and the fact that this stock blasted up here like this and then reversed intraday to close near the low of the day and lower than it opened reflects, in my view, the end of phase one. Now what we're doing is we're waiting to see whether Amazon corrects or whether it just kind of drifts sideways for a while. But what I'm not expecting on this stock is just a continuation of the uptrend. So even though we get a positive close, by 1/3%, $2.50, this is nothing. It would, if you're just looking at a line chart, this actually still looks pretty good. But when you consider the intraday reversal on this, this is known as a dreaded tombstone doji. The name kind of speaks for itself. I think you want to be out of this stock now if you're trading. If you're investing, stay long. Stock's doing fine. But I'm actually short this stock right now by puts. Had bought some puts during the day here, but I don't like to hold puts overnight, not on a stock like Amazon, but I'm short some way out of the money calls because I do not think that Amazon is going to go up in the future at the same rate that it has in the past. So my suggestion is you start clearing out of Amazon, at least raise your stops, but do protect your profits on this stock because we don't see these types of squeezes very often, not on these high-profile stocks like Amazon. And I will tell you, these squeezes do not continue indefinitely. At some point, they will reverse, and at that point, that's when you want to be exiting the stock. Okay, this is Dan Fitzpatrick at Stock Market Mentor. Hope to see you there.